welcome to Edison Open House Transport Futures 2021. Now, lithium has featured often in this series, and in this session we're going to focus on Lepidico, an Australian company with a less common route to lithium supply. And with me is its CEO, Joe Walsh. Joe, hello.
Hello, Vivian, good to see you.
Now, can you give us a bit of a lithium 101 to start us off? How is it normally produced, and what are the various options for production and a sustainable production?
Sure. So traditionally, there's been two principal routes to producing fine lithium chemicals. The first of those is the brine sources, which are largely located in what's referred to as the lithium triangle in South America, so Chile, Argentina, and Bolivia. And then the other source is hard rock from a mineral called spodumene. And up until probably about 10 or 15 years ago, there was one large-scale mine in Western Australia called Greenbushes that satisfied nearly half of world production of lithium chemicals. But the spodumene route has a second step. So the mines produce a spodumene concentrate, which then gets processed via a chemical conversion process that involves high temperature roasting and then calcination, and then a hydrometallurgical process to produce the fine chemical. So they're two very, very different routes to producing lithium chemicals. Other sources in China, there are also some brine operations, and then there are also some hard rock. But generally speaking, from a global perspective, those have been the main sources. And probably until about 15 years ago, global lithium demand growth was low single digits in percentage terms. So the incumbent producers could satisfy demand growth. Prices were such that there wasn't really any significant incentive to bring new capacity on stream. That all changed towards the end of the 2000s and then coming into the teens. And there's been two price runs over that period. And it looks like we're just on the cusp of the third price run or the third price cycle, since we've really seen demand pick up due to the advent of lithium-ion batteries. So the two sources are brine and traditional spodumene from a hard rock source. There are, however, now companies looking at alternative sources, and we're one of those, Lepidico.
So tell me about your technology and the way in which it's unique.
Okay, so I'll maybe give you a little bit of background as to how this came about. Our chairman had done some work looking at extracting potassium from lithium mica minerals, and that body of work had been a technical success but an economic failure. There just wasn't enough value in the fertilizer, the SOP fertilizer, to justify the process. But it got him thinking there are other lithium mica or mica minerals with other metals in them, such as lithium, that are potentially sources of economic sources of these metals. So after a series of test work programs funded from seed capital, the company needed more funding. They had developed the process which today is known as LMAX, and they'd successfully produced some high quality lithium carbonate. In 2016, the company listed on the Australian Securities Exchange, and rolled the clock forward to today. We've now developed a pilot plant in Perth using our process technologies. We've completed a definitive feasibility study for a vertically integrated project. So there's the mines, and our mines are in Namibia in Africa. We'll be redeveloping these mines. So again, it's very, very important to have good environmental and social credentials these days. So these are brownfield developments. We'll be building a small concentrator there, and then exporting that mineral concentrate to Abu Dhabi, where we'll be building a chemical conversion plant that employs those process technologies, LMAX, and then a second technology called LOMAX to produce lithium hydroxide. So we are an alternative source of lithium from the two traditional sources of brines and the hard rock spodumene. And then there are other sources which are also a raft of companies are trying to develop now, many of them from sedimentary hosted sources.
So essentially, you're finding lithium in non-traditional sources where perhaps it wasn't economically feasible to take that lithium from before.
That's exactly right, Vivian. So there wasn't an incentive price historically, but as demand growth has picked up, the lithium price has tended to run higher. And it's, you know, I'll use benchmark mineral intelligence data because I've got it to hand. You know, they're forecasting a long-term lithium carbonate price of around $13,000 a ton. But over the course of the next 4 or 5 years, they are forecasting another price spike, with prices going up to $16,000, $17,000 a ton. At those kind of prices, there is very clear incentive for producers to be bringing on new capacity.
And give me an idea, if you can, of the percentage extra capacity that you are able to give the world economy in this way.
We're fairly modest in the overall scheme of things. So our project we call our phase 1 project. So it really is proof of commercialization. So it's modest scale commercial production at around 5,000 tons per year of lithium hydroxide. To put that into context, last year the overall industry produced around 330,000 tons. But the outlook here is really quite extraordinary. So probably 3 or 4 years ago, most commentators were forecasting production by the middle of this decade, so 2025, to be around 500,000 tons, maybe getting up to 1 million tons by the end of the decade. Most commentators today are forecasting around 1 million tons by 2025, so pretty much a 3-fold increase from where we were just last year. And then it's close to 2 million tons by the end of this decade. Some commentators are even getting closer to 2.5 million tons. So that really, this is exceptionally high growth rates. And probably the biggest challenge here is going to be for the industry to be able to come anywhere close to delivering on that.
So you've got a resource, you've got a definitive feasibility study. What are the next steps in developing the project, and over what kind of time frame?
Yes, so we completed the definitive feasibility study around this time last year. And then the main work streams that we have to transition the project into development are permits and approvals, offtake for our products, and finance. So we are largely permitted now. So in Namibia, we've got all of our permits in place. We've got a mining license, we've got an environmental compliance certificate, we've got water extraction rights and capacity for more than twice the amount of water that we actually need. And again, in this sort of environmentally sensitive day and age, we don't use a lot of water, which is an excellent outcome, I think, and an attribute of our project.
So no lakes, for instance, left over afterwards, which is one of the issues elsewhere.
That is correct. So there are various concerns surrounding brine extraction. We will be using modest quantities of water from groundwater bores. And all of the test work that we've done there indicates that we won't be materially impacting that aquifer. It's a very sparsely populated region anyway. And the local farmers do actually benefit from the water that we provide them. So we're providing a social benefit and community benefit there. And we'll be recycling 85% of our water in our process. So we also have very low carbon emissions relative to the industry. So the brine producers tend to be the low carbon intensity, with sort of 5 to 6 tons of CO2 produced for every ton of lithium carbonate equivalent. We estimate that will be somewhere around 5 to 7 tons. But traditional spodumene, where the concentrates have been exported to China, indications are their carbon intensity is 15, 16, 17 tons per ton. The new converters being built or planned to be built in Western Australia should do a lot better, but it'll be challenging, I think, for them to be coming down to the sort of levels of the brine producers and where we're at because of their energy intensive roasting and calcination steps.
Now, in the UK, the entire UK population is going to be in Cornwall this summer because, frankly, it's the only place we can go. We can't go outside to almost anywhere for holidays this year. But Lepidico is also going to be in Cornwall. Tell me a bit more about that.
Yes, so this actually goes back to my university roots, where I went to the Camborne School of Mines down in the southwest of Cornwall. And through that, met Jeremy Rathall, who's the CEO of Cornish Lithium. And they have a number of projects based down in Cornwall. They've got a geothermal water lithium project, but the one that we're most interested in with Cornish Lithium is their hard rock project. So they've, the St Austell granite has a reasonable proliferation of lithium mica minerals within it. Cornish Lithium late last year purchased licenses for a process technology pack from Lepidico. So they're now in the process, about to be building a pilot plant, which they expect to be operating in Cornwall using our technologies, with the objective of then commercializing lithium hydroxide production using those technologies sourced from minerals in the St Austell granite.
We've seen a big environmental movement. It's becoming more and more important. What impact has ESG had on your business and indeed on your, if you've adopted this policies, on your share price?
So you're right, Vivian. It is now essential to be able to demonstrate environmental and social elements associated with any project. And those requirements are becoming more and more stringent in the Western world, and particularly in Europe, like that, given the legislation surrounding requirements for auto manufacturers to be producing vehicles with known and demonstrated low greenhouse gas emissions, particularly carbon dioxide. It means that every single supplier in that supply chain has to be able to identify what their exposures are, what their emissions are. So it's a vital part of it. Interestingly, I don't believe that other parts of the world are so stringent, for example, in China. So I think that's one of the perhaps advantages for Chinese companies is they'll be able to source lithium chemicals or other chemicals for that matter, which maybe have higher carbon intensity associated with them without paying penalties. So it does mean that, particularly in Europe, and to a certain extent, it looks like this is emerging in the United States as well, that it is going to be progressively getting harder to be meeting the requirements for providing low emissions products into these supply chains. But carbon dioxide is one of the main focuses. Low water intensity, being able to demonstrate that aquifers aren't being damaged by processes, also it is going to be essential, and demonstrating that the footprint of these projects is reasonably contained. So it's one of the challenges that some of these brine projects I think are going to have, is the fact that they do have a large footprint to them.
But of course, it's not just the regulators that are demanding this, or indeed, citizens. It's investors. I mean, they are really committed to some of these ESG goals now.
Absolutely, and it's both equity investors and also lenders. So the providers of debt are very focused in these areas, and it is one area where I think Lepidico has a real competitive advantage. I mentioned earlier that these mines in Namibia are brownfield developments, so they were mined for other minerals during the last century, and they were effectively abandoned. Through our development and then final closure, and we've already done a preliminary closure plan to be able to get our mining license and our environmental compliance certificate. We will actually be improving the environment from its current situation. So we've also, as I mentioned, got low water use, competitive carbon intensity, and those are elements that have resonated with the US government's International Development Finance Corporation, which is a development finance institution providing debt funding to projects in developing countries. And so Namibia fits there. But these DFIs will only lend to projects that can demonstrate they've got excellent environmental and social credentials. And so we actually see it as being a benefit that we've got, that we can leverage those credentials to be able to secure very competitive debt funding from a source like the US government's Development Finance Corporation.
So it's interesting what your view on the future of the sector is, because you say that, Chinese companies are going to be in that advantage, but actually I suspect that in the future they may be at a disadvantage because, their zero emission credentials are really going to be questioned, and it's going to be increasingly difficult for companies to use Chinese sources in the way that they have in the past. What's your view of the future of the sector?
I think you are right there. The Chinese market, however, is a large market. It's a large domestic market. So I do think that we will see Chinese companies being able to be very competitive to secure supplies of raw materials into their domestic market. But your point's extremely well made with regard to the potential export then into international markets. And so this is where I think European, North American companies and other Asian countries such as Japan, South Korea, that are very, very active in the EV electric vehicle supply chain, they will be manufacturing materials, I think, which will have lower carbon intensity, lower greenhouse gas emissions associated with them. We're seeing a lot more policy coming through that's targeting net zero by certain years, be it 2040, 2050. So this is absolutely here to stay. And I think that within the within the non-China markets, it's going to become a very, very competitive space. And then I think that those vehicles and products will then obviously have a market in China as well, probably a more prestigious market.
Joe, the mining industry typically has very, very long lead times. It's very, the capital expenditure is very high. And yet the electric vehicle manufacturers may change their, not only the demand, but also change the chemistry of the type of lithium that they are wanting. Tell me a bit about that.
Yeah, it's a very pertinent point right now, and this really started to come to the fore, I think, last year in around September time, when Tesla had its battery day, and then it was really reinforced in March this year when VW had its power day. And it looks like these OEMs, these auto manufacturers, are now embarking on mixed battery cathode strategies. And different cathode chemistries use different lithium chemicals. So the lithium iron phosphate, for example, will use lithium carbonate. The higher nickel content cathodes, where you can get a higher energy density, they require lithium hydroxide. And one of the things that was very clear from VW in March was that they weren't sure as to what kind of mix of cathodes that they're going to be requiring across their product offerings. And so it's going to make it, I think, really quite difficult for cathode manufacturers to know, particularly 2, 3, 4, 5 years out, exactly what quantity of hydroxide versus carbonate they're going to need to be contracting for. And then if we see the next frontier being solid state batteries, the likelihood is that they will have perhaps a lithium metal anode, and so then lithium metal will start to come into the frame as well. So there are some challenges here. There will certainly be continued requirements for both the major lithium chemicals, hydroxide and carbonate, but in what quantities I think is difficult to gauge. And the other thing that has tended to be moving is the specification of these materials, and the spec is tightening up. I think I'd like to think in the fullness of time, there will be, as technologies evolve, the spec may lighten up a bit, because certainly some projects around the world do struggle to meet those specifications. And it's going to be really difficult for the industry to be growing at the sort of rate that these auto manufacturers are going to need if the specification continues to tighten up more and more.
But are you confident that Lepidico is well placed in this arena?
Oh, absolutely. Like, I think that hard rock sources tend to produce a high spec product. If you think that a mineral only has so many elements within it, and so the risk of getting impurities into the final product really then comes to what reagents you're using and making sure that you're using good quality reagents. So hard rock sources, I think, will continue to be very competitive when it comes to producing high purity products. You know, the minerals that we're focused on, the lithium mica minerals, they do tend to include other metals as well, notably cesium and rubidium. Our process, our LMAX process, is extremely efficient in removing that cesium and rubidium, but they're an important part of the project as well, because those two metals are on the US State Department's list of 35 critical minerals. They're also a subset of 14 that the United States is 100% reliant on imports of. And from probably the end of this year, early next year, the cesium and rubidium markets will be absolutely be dominated by Chinese interests. So we've got the world's only mineral resources and or reserves of undeveloped cesium and rubidium, which I think is another angle here that will give us and our technology a real competitive edge.
I've got one final question to ask you, which is one that I've been asking all our guests on Open House, and that's, how do you see the future of transport? What do you think it will look like, say, 10, 20 years' time?
Well, I hope it's a lot quieter. It'd be good to get rid of those noisy diesels. So I think it will be, transport will be quieter. It will obviously be a lot more environmentally friendly. I think that the pollution that we're seeing in a lot of larger cities around the world will largely be a thing of the past. But I think that the technologies that are being used will have evolved as well. So the lithium-ion battery per se will have probably been superseded, maybe even a couple of times. So the next frontier here is probably solid-state batteries, because lithium-ion batteries with that solvent electrolyte do have safety issues potentially. Solid-state gets around that. But a solid-state battery will probably still use a lithium-based cathode, and quite possibly a lithium-based anode as well. So the amount of lithium in a solid-state battery will quite possibly be somewhat higher than in a lithium-ion battery. It will also have much higher energy density. And so the batteries to deliver the same amount of power will be coming down in size. So I think that we've yet to see sort of more miniaturization occurring within the battery, the side of the batteries. After solid state, we'll probably be looking at supercapacitors. There's an awful lot of research and development work going into that area. And again, largely lithium based. So the one constant here, and I think that it's a function of where lithium sits in the periodic table, it gives it those unique characteristics and properties, which means I think that for the foreseeable future and over that time period that you mentioned, Vivian, out to 20 years or so, I think that what we'll see is lithium-based batteries, which will be a lot smaller. And as a result of that, it'll give a lot more flexibility in the manufacturing of vehicles.
It's been such a fascinating conversation. Thank you so much, Joe. We've really appreciated hearing about Lepidico. Thank you.
Thank you very much, Vivian.